The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome to the show this morning. It's getting cold here in North Carolina, just like I guess it was, minus 10 yesterday in Chicago at one point. It's heading this way, and the market has sold off tremendously at the same time. I don't know if that has any correlation, but it was ugly yesterday in the U.S. stock market. And, why did that happen? A number of things, but I've got the U.S. 10-year up on my screen right now. And this really, calling the stock market ups and downs, when we've looked at our market breadth indicators, we're going to go through that today. That actually crossed to negative yesterday morning. Pre-show, we were still a little positive. All the stocks hadn't opened, but as the market opened, the daily had crossed to negative and actually closed negative. But that being said, and being able to time the U.S. stock market, we've been talking about buying dips because of the breadth positivity for a long time, and how that breadth changing over to negative hasn't happened that often. But one thing that really has, you can basically lean on as a friend has been this Treasury trade. And I've got this up on the screen now, and having that correlation between the U.S. stock market going up and the Treasuries kind of going sideways at basically at worst case scenario. And if the market sells off, the Treasuries go higher, even though the Fed has come in and kind of, pulled some of the excitement of continuing to buy Treasuries and support the debt market. These things really show their hand constantly, and look at what's happened recently. I mean, these things edged up. This is the 10-year on a daily chart here. These things edged up as the market was kind of edging higher, and then just kind of sitting on the launching pad, and lo and behold, we start getting some sell-off situations. We crossed back in the U.S. stock market, and we crossed back above some borders, some inflection points that we were paying attention to, that 126.06, namely, excuse me, and then it's kind of getting to be okay to be long again and not okay to be short. We had the close above the 126.31, let's just call it 127 on, the day after New Year's Day, like last Friday. Then we had the retest yesterday morning, almost to the tick, not to the tick, but almost to the tick. And then we've been on just a catapult slingshot move up north again. So the theme of what I'm trying to say here really is, we've been avoiding all shorts on the Treasuries, even when we had some damage here on this March contract back in late October. Again, this was still pass on the shorts, got some long situations here, got some breakouts, and those retests. We've been basically looking at this market from the long side only, and eliminating the short side. So that has been really something that's worked out very well. There's no reason, in my mind, to change the tune on this, even though, we've had a decent pullback in the S&Ps and we're sitting kind of on recent all-time highs. This is something where it's again, not okay to be short. Okay to be long, not okay to be short. Here's the short-term 240s and 60s. Things on their highs want to go higher. I think this is going to be breached at the very least. And if you've been long since we've been talking about this, crossing back above the 126.06 area on the dailies, we had some targets we met yesterday. We talked about this, and we talked about this 127.24 area not stopping there, and that definitely that didn't slow this thing down. We talked about not shorting against that and trying to continue to stay long through that area. So this has been the gift that keeps on giving. And let's just look at the S&Ps relative to this. Excuse me. Let's pull up our S&P chart. And I think we had, over 300-point down day yesterday. We talked yesterday about the 2027 area possibly being able to pick a battle there. That was pre-market, and the breadth was still somewhat positive on the daily, and we had that crossover, breadth turning negative and getting below the 2027. I personally tried to pick a battle there to try to stay with that same frame of mind of buying the dips on support, and that was where we, stops are well needed in any type of trade, and that's exactly what happened. I don't always talk about all the winners. I mean, we have to talk about some of the losers here, and this is one of the instances where we've crossed back below. And I'm going to pull up some of our breadth situations here in just a second as we wait for this to load. I've got our commodities and currencies and ETFs down below in the standard grid. But as you can see now, the breadth on the daily's negative, the weekly's still hanging in there. What happened in the near past is that we had, and this is kind of our first crossover here. So now on the dailies, you've got actually a resistance area you need to look at. That we were looking at this as support yesterday. You're looking at now this 2027 area is resistance to be sold on the intermediate basis based on the breadth. And what does this mean? This means all the stocks in the S&P 500. If I pull those up, get rid of these. Just a review here. If I pull all these up, that means there's more stocks in the S&P 500 based on our little math calculation there that are trading below profiles than are trading above profiles. And that means that the market breadth is turned internally, at least in the interim, on the intermediate basis, to stocks trading in an imbalanced area for the most part below profiles. Now, as we looked at this a little back in time, a few weeks ago actually, we had our weekly breadth stay positive, hanging in there. We got to a big time inflection point. We always look at these weekly inflection points as the more powerful. Remember, weekly, daily, 240, 60 on down the line. We had that pullback right into that major inflection point with a little bit of noise. You're not going to, the weeklies you're going to have to give yourself a little bit of noise levels on most of these inflection points. You're never going to, or they're sometimes going to be to the tick, but not always. And because that breadth was positive, we were still trying to buy the dip, so to speak. Now, technically, on the long term, we're in the middle of a fair auction here. Just keep all this in mind. Sometimes when you're trading, I'm not immune to this. You kind of get really concentrated on what's going on intraday or on shorter term time frames, and sometimes you need to just kind of step back and say, you know what? We're still in a balanced area on the long term. We're kind of scraping around here. We don't have a lot of leverage on the long term. We just know that as of right now, we've probably got better long opportunities to pick a battle here, and that will be closing again on a daily above 2027. But right now, on the intermediate term, we've got some breadth changes that have happened. And we're looking at on that time frame being able to sell resistance, and that means it's okay to sell these 2027s area as we were looking at it as somewhat support yesterday, and that's just the way things go in trading. I mean, we always talk about lose a little, make a lot. This is kind of where you lose a little here, hopefully, but the breadth is still positive on the weekly. We've got this 1972 sitting down here, so this would be, if the breadth stays positive on the weekly, this 72 sitting down here, as well as, pull this back up, the weekly, as well as this 68. So we're looking at 68 to 72. If the breadth stays positive on the weekly, even with, what is that, another 70, 40, it's about another 50 points down move. That may be unlikely this time. Breadth was staying positive. as it was before on the couple of weeks ago. But if we pull down into there and the price stay positive, we're going to look at that again as a support area, just by the game that we always play with these profiles. And I don't see a lot of conflicting information now to really vary against that concept. So, what do you do now? I think this is, put a gun to my head, you have to kind of sit on the sidelines right now. You have to wait until we get back into a high probability trading area. And considering everything I just said, 2027 is going to be kind of the waiting game, in my opinion. So, what does that mean for the notes we just looked at? That means that in the in the intermediate run, the notes actually could climb higher based on the stock market giving you that, not free trade, but the leverage. Market goes lower, notes go higher. Market goes higher, notes, have generally gone sideways. So that's kind of the way I'm looking at this relationship right now. You've also got this, Europe is, made some new statements about, really getting into the QE situation. The euro's sold off a little bit more. Here's the dollar. This has just been insane. What did I do here? Okay, get this back to where it's okay. The dollar, this is something, again, crossing back above 89, 60, 61s. It's okay to be long, not okay to be short. And, we don't have any things up here. As we talked about yesterday, even, we had a little bit of a pullback, but we never had any colors change temperament here on the daily. And that, God, why is that doing that? Okay, get that back in force. We never had any new supply indications start to happen on the dollar, and that means that our Vega indicator up here never started turning shades of orange, and therefore no new supply was predicted to start to even remotely hint of happening up here, and therefore no new profiles. So again, is the dollar up too high? Should we be looking at some kind of reversal up here? I don't think so, not yet. We'll get some new supply up here at some point. Then you'll have some opportunities and some new inflection points to pay attention to, hopefully. So as, the talks on the QE situation in Europe, definitely putting the gas pedal to it. Obviously, the dollar is comprised of about 6 currencies. It's in the, the amalgamation of the euro. I'll point those out on the next break, exactly what they are. But, this thing isn't too low. This thing doesn't have to be on sale down here and time to buy. We talked about 120 being some targets, excuse me, before when we were trading about 135. And we're going to, have to kind of look at this again because there's really nothing to really stop this at this stage. We'll be right back, folks.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Think or Swim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're kind of getting into the euro and the 120 targets we had talked about from the 135 area, and that's what, 1,500 pips. Yeah, hadn't been a lot of reasons to get off the short pedal here on the euro, as you can see. I mean, profile's regulating this down, but what do you do now? We kind of ignored any divergences, making new lows here on price action, making higher lows here on the navigator, just because of the overhanging fundamental anvil short dialogue that's really had to happen on this particular product. But what do you do now? Again, we having these profiles appear, even on the short run, short term 240s, having these profiles appear above price action again is extremely bearish, especially in the mode that this thing's been in. I don't see this. It's just it's hard to sell things in the hole. But this thing's provided you some really good opportunities lately. We've talked about this, namely a couple of weeks ago. This is the weekly, and me and Eddie were actually laughing about this, getting just a freebie back up into that major inflection point at 125.74. So what do you do now? I mean, I think you just hang on to the shorts if you're in them. If you're thinking about nibbling on the long side, I think you better think again, because there's not a lot of good conviction type reasons here to get on the other side of the trade. And this thing just continues to fall apart. And I never really listened to Kramer I don't know, you guys, he's kind of a funny guy sometimes. But now he's saying, which is actually a contrarian type indicator to me most of the time. Now he's saying this thing probably needs to go on par with the dollar. I don't disagree with that, actually, but just the fact that he's turning bearish on the euro like that, that means probably watch out for some ricochet moves up. So take that for what it's worth. The pound really has come apart at the seams, and this thing's making new lows as we speak. And again, we pointed out yesterday, past couple of days, we're just crowding, compressing into that inflection point, as you can see around that 155.91. And a little bit of education. I mean, stops can be oriented around these things. That's primarily what I use them for. I have my own ideas about how to combine our indicators and how to use them. But there's been and we've kind of laid off some of the stock picks lately because the big leverage and the big moves as a trader, you kind of want to be looking at things that are in play for compressing your time frames into hopefully making as many points as you can in a shorter I can't me personally, it's very difficult for me to hold stocks overnight for any long period of time. Therefore, I kind of gravitate to where the leverage is and where the inflection points are on products that are in play, and this has just been one of them lately, along with the euro, along with the yen. Now, the yen is, we talked yesterday a little bit about this, and I want to point this out, talking about things usually in play here. 118.20 down here, rounded off. We haven't gotten there yet. We've reached a low, what is this, 118.66 rounded off. This is something that, again, this is something where you kind of stay away from. I've stayed away from the short side on this, so I've been kind of, as you've been watching this show, been looking at this from the long side every time and opting out on the shorts, i.e., some of these getting stopped in the longs, but then getting back in the long game. We talked about this. Now, in my opinion, you got a 118.20 sitting down here that you just got to wait patiently for. These aren't, these aren't guaranteed, but right now you've not really got any leverage, and I'm not a big fan of going short this product. Just exactly the same reasons as the 10-year. You've got the Japanese government sitting behind this thing. I've heard the number 145 being talked about in the last couple of months for this. Again, that may or may not happen, but at least you've got a regulation type situation with these profiles, in my opinion, to take advantage of that. I saw a comment about Kramer in there. He's he's a showman and he's an entertainer. He's made some horrendously bad calls that he's talked about stocks before earnings that probably have got people taken out in the body bag. So not a big fan of him in general, but again, you got to take for what it's worth. It's entertainment, folks. We'll be right back, and we'll take a look at gold, and we'll take a look at some stocks that are hanging in there that might provide some value alongside.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
I've been looking at this from the long side. We've been, hoping and praying, or I have, that we can get some closes above this 1199, 1200 area, and that's happened a couple of times. And we found some support down here at some lower numbers, 1152, 53, with a little bit of noise, and been able to, maybe make a couple of points on the upside, but also get stopped out. I got, kind of churned up a little bit with this thing. We got to close above yesterday. That's what we're kind of always looking for, above 1200. And then we've got a little bit of follow through here. Didn't get a retest this morning. We reached a low of 1201.6, 1201. That's pretty close to closing above. And just to kind of prove that theory again, this is something that it's just a real simple situation. A lot of times where we close at 1204, we come back close to this, and you don't want to miss the trade. So usually, in my opinion, would need to not just wait for the tick there, just give yourself a little bit of room on the above and below side. And we've, climbed about, 10 or 15 points above where that closed, and to go back and retest that happened this morning. So what do you do now? I think you just got to sit tight with gold on the long side, put your stops again below the 1200. And again, looking at the 240s, you don't have a lot of reason to think that this thing might be giving out of gas yet. And again, I've taken that attitude a couple of times with this product. I'm going to stick with it. And, we could start climbing higher. There's a lot of, seemingly this time, there's not a lot of people wanting to step in and buy the dip on U.S. markets. Treasuries are climbing higher. And gold may finally get some legs up, but again, it's stepping back a little bit farther and looking at the bigger. Last month or a month and a half ago, we did clear the weekly up for highs at 1218, 1219. We got close to it today. That could be considered for guys who are considering that this is going to kind of churn around to stay within the balanced area. This may continue to happen. I'd love to see this thing get above 1219, but I'm saying I want to see this, I want to see that. What do you do now? Like, what mindset do you take? I'm just going to try to continue to stay long here on an intermediate basis and just keep the stops below 1200 and see if this thing can develop, because I know that that this particular product has started to churn into a little bit of a range here, and that means that at some point we're going to break out. The volatility of this is, and if you look at the options market on it, it's been, the implied volatility has been getting kind of sucked in. Tomorrow, if you want to take a look at that, we can take a look at that. Those graphs on that. I was looking at it actually the other day. So that's my kind of take on gold, and we got to take a look at crude oil before we move into any stocks. This is, I guess, every other news story on any news agency seems to be about gold here, or seems to be about crude oil. Again, some guys that I was talking to at one of the big houses up in New York yesterday, they were like, well, around 100, you started getting a little bearish on this, and why it's been, crossing below profiles at around, 98, 100 in that area, and then it's been kind of okay to be short, not okay to be long on a long-term basis. And I know we've got all these magenta bars down here, but again, this trade really doesn't show any reasons to take the other side. And, a lot of people that I've talked to, like, oh man, gold's on sale now, blah, blah, blah. No, it's not on sale. I mean, and we talked about this compression down here, and that just killer retest that happened on Friday. We actually hit 55.11 to the tick, which is that inflection point, and these are all provided on the scanner. You can go in here and get in. I had the kind of some strong stocks up there I want to take a look at, so I'll just leave that alone. But crude oil, the inflection points are painted on there, and right now you don't have any new demand areas appearing down here. In fact, if you look at the 240s here, you haven't even had any mitigation of this, even getting back above the 240 profiles. And hopefully, for any people that want to start picking some battles on the long side, you'll have some new daily supply numbers appear. And as I pull crude oil up here, let me just destroy this real quick. I was looking at before, and let me pull up our futures. I've got a filter in I need to take off. Okay. So as I look at our futures, these are the very apparent, and we're going to talk about natural gas in a second, but, this crude oil heating oil section here and natural gas, reds across the board pretty much, and crude oil, we don't even have the 240 starting to turn. So again, these are inflection points to be sold. If you were looking at crude oil the whole way down, it's easy to kind of look back in time and say, oh God, we should have done this, we should have done that. But based on these profiles, we actually have been every single show. Let me see here, get that back. Every single show been talking about, every reason in the world to not go long crude oil. So again, it's still the same tone. I remember I had loaded up on crude oil back in 2008, around 37. I think it went down to 33, and I got stopped out. So again, these are things on the lows go lower, and that's just all you can say about crude oil right now. I want to take a look at our scanner here. I want to take a look at some stocks that may be of interest. I want to get rid of that. Go in here, S&P 500. As it winds up here, we're going to go into our daily. Let's see what's trading up above the box on our daily. Just a real simple filter. Considering, and we talked about this the other day, the relativity of how stocks are acting and where we possibly think the market, the broad market in general, may be going up or down or hanging sideways. Right now, we talked about the S&Ps earlier. Keeping that in mind, we may go back and retest 2027 today. That may happen tomorrow. We may go past 2027. So that being said, and my idea that we may drift a little lower here, but we're going to have some violent moves up in a down market, and 2027 I think is kind of let me just pull that up again. I'm going to get to the stock talk in just a second here. There's our S&Ps. 2027 is about 10 points higher. And, my thought on this, since the breadth is negative on the intermediate dailies, and we had that turn negative yesterday morning, and therefore it was, around that 2027 area. We turned negative right below there. I was trying to pick a battle there for just a little bit of a bounce. It never happened. It actually never even came close to happening. But that retest may happen. So, again, you may have some stocks that start falling apart a little bit more so, but that the market may move higher. That's a chance that'll happen. So I want to take a look. If you're in that camp of the market moving higher, which I'm not, you want to take a look at some stocks that are possibly sitting around support areas. And I just wanted to look at Kimco Realty. KIM is one of the first stocks that showed up here. KIM. And this reversal yesterday, here's the weekly. It's obviously a real estate-oriented stock. Here's the daily. This stock, kind of did a fight against the trend here the past couple of days, and we're back on the highs sitting here. If the market continues to head lower and this thing stays around this inflection point, which is painted pretty clearly on our scanner with the mouse over there at 2068, this may be something to leverage. Let's see if how do I get this back? Okay. Got a little Windows issue here. I can't. Oh, here we go. Okay. This may be something to leverage against this inflection point. You've got to monitor this and see how it acts around here, especially if the market heads lower. This may be something that, again, we never even closed below profiles here. We're not breaking down. This is one of the stocks that's showing relatively decent strength in a weak market. A couple of other things on the radar screen. And again, these are stocks on the intermediate that are hanging in there. I want to take a look at ZMH, Zimmer Holdings, right at two high probability areas. ZMH. Okay, here's the situation on ZMH. We actually had we had a new weekly profile appear this week, and we're sitting above, and we've got a situation where we actually just ramped past 116.14, which was that upper inflection point. So again, if the market happens to move higher, this may be a leverage point, a buy area, 116.14 on ZMH. These are, this market is obviously in a volatile stance right now, but some of these stocks may climb higher if the market does turn north. And if you're looking at buying stocks, you've got to take a look at some of these ones that are trading around profile highs and not showing any type of weakness. Fill up a couple more here. Lockheed Martin, LMT. This is something else that's sitting on inflection points. Now, this to me is a little more attractive. It's been a strong stock in a strong market, and we were actually having profiles appear pretty far below price action. As you can see there, we got there. We come back down into finally an inflection point we can pay attention to, 189.29. It's a relatively expensive stock. I don't know if that's in the wheelhouse for some of you folks, but we're sitting right at support here, and on the weeklies, we're also sitting well above weekly unfair highs too. So Lockheed Martin will be a little bit more choice situation, in my opinion. You've had some pullback here on the stock in general, but you're still sitting right at the top of profiles, and you've got a great inflection point to pay attention to on Lockheed Martin. Another, let's see, Allen Bay Communities, AVB. It's kind of real estate oriented too. again, a strong stock and a strong market. You at least know where to orient stops around this, 162.91. Let's just call it 163 on a strong stock and a weak market. And the weeklies, you've got some resistance up there at around 167.33. But as you can see, this week alone, we've climbed higher. If we can get a weekly close above that 167.33, I think this thing could actually move higher. It's showing itself as a strong stock in a weak market on a relative strength scale. When we come back, we're going to take a look at some weak stocks that could fall apart a little bit faster based on the market possibly heading a little bit lower.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend. A unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. What I do with scanner now is, as you see, there's a lot of bottoms here in the daily column. All I did was come in here and hit daily, choose bottom, show only matching results. I was looking at this yesterday, and I was just trying to pick out, what was really sitting at the bottom of weekly and daily profiles. We're going to look at Reynolds American in a second. We're going to look at Ecolab, and we're going to take a look at one more here. Actually, it disappeared. This thing automatically sorts, by the way, so real time. So one of the things I was looking at yesterday was ExxonMobil, trying to find things that were trying to satisfy. I know this stock's on a lot of people's radar screens in general. But I was trying to find things that were sitting, possibly not yet breaking down, and also relative to oil making new lows in the onslaught that happened yesterday. I mean, ExxonMobil obviously didn't do terribly good. Also during that scene, it was kind of holding up before that. As crude oil was heading lower, but 89.66 daily unfair highs. Again, on the scanners, is pointed out pretty easily. 89.49. So you got a little DMZ down there. You got a little bit of a pop off of it. Let me see how much that bounced actually. And relative to oil tanking and possibly maybe going lower, in my opinion, you've got a little bit of a trading opportunity on ExxonMobil from the long side. I mean, the stock kind of held in there, gave it up yesterday, I think, in sympathy with crude oil more than anything else. But this was, I want to pull this up. Let me get back to that thing. Okay, so I want to pull this up individually. Let's see, XOM. Right at the top there. And as you can see, I'm going to mouse over and see those inflection points. Actually, I don't know why this is not working right. Hold on. Cross this out and restart this. Restart our S&P 500 here. As you wait for this to come up. Got to take the filter off. Okay, we're almost there. By the end of the show, I'm sure we'll get there. And here's the ExxonMobil down here. Just wanted to look at it relative to the broad sense. Those inflection points, 86, 88, and 89.66 top of the box, and 89.49 bottom of the box on the weekly. So in my opinion, this was a decent trading opportunity as oil was pulling back. It was showing relative strength on the long side versus oil in general already. And any type of pops in oil, which may or may not happen, we pulled back significantly pretty quickly here. There's not a lot of reasons to go long oil right now. But if oil does happen to start, changing gears and moving north, and we start seeing some areas in crude oil in general that would be some new demand areas down below ExxonMobil, the good news is you may be able to orient stops around that DMC 89.66 combined with 89.49 from the weekly and daily DMZ, and just be able, you got a high probability trading opportunity based on if oil does ricochet up. This thing may give you a couple of dollar bounce here, which may be something to pay attention to. Well, we're going to pick it back up again tomorrow. Steve Rhodes is going to be up next, and you guys have a good day trading today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.